Welcome to CEO Insights. I'm Marilyn de Guzman with Investing News Network. I'm speaking with Stuart Harshaw, CEO and President of Nickel Creek Platinum, an exploration and development company in Canada focused on nickel. Hi, Stuart.
How are you today?
Good to see you.
Excellent.
Right, so we're talking about nickel. I guess we can start over just to launch our conversation. Can you sort of talk about the current supply and demand landscape for nickel?
Absolutely. I mean, nickel is one of the smaller commodity markets of the bigger base metals. So it's sort of in that, say, 3,000 metric tons a year. Or 3 million metric tons a year. It kind of goes up and down a bit there. But essentially, the supply side has been really dominated for the last 10 years from Indonesia and the, if you will, the non-sulfide ore. It's a laterite, so it's an oxide. And that's really made up almost 100% of all the growth in the nickel market in the last 10 years. It's been through the mining in Indonesia, Philippines, and New Caledonia, for instance. So that supply has been, fairly robust. It went through a period there during COVID where they were having some difficulty expanding. And so there was a slowdown on the ability to expand those projects that they were putting in. The other side of it is demand. So the demand of nickel has been one that has grown at sort of a, say, 2.5% to 3% rate every year for the last 50 years. It's dominated by stainless steel. Stainless steel, as everybody knows, has got many uses. You see it in your kitchens. You see it in construction sites, etc. What we're actually seeing from a demand side in the last few years is really being the electric vehicle evolution, and really with the entire world getting on this lower carbon footprint associated with electric vehicles. And that's really been the new demand. So I would say nickel is a conversation of those two, if you will, competing entities, supply out of Indonesia and higher demand for the EV battery market.
Right. So with that rapidly emerging EV sector, about 70% already of the world's nickel production is being consumed in the steel industry. But now with this emerging EV sector, obviously supply is going to be increasing more and more. Can you talk a bit more? And you've mentioned, some of where the supplies are coming from right now, but where are the other prospects for where the suppliers coming from? Can you talk a bit more about this shifting dynamic in terms of demand for nickel and where the supply will be coming from?
Yeah, absolutely. So the thing about electric vehicles and the battery technology, so nickel has been a dominant participant in that industry for many years. Nickel metal hydride many years ago, and really the lithium battery, which has significant nickel as part of the lithium batteries. There is different battery technologies, so the growth rate of that EV kind of world will be, evolving over time. But it's a very strong demand, and it's growing rapidly. I've heard automotive companies talk about 100,000 tons of nickel needed per year in order to meet the battery requirements. You times that by 12 of them, and you got a lot of nickel required. The challenge is it's got to be very high grade nickel. So this is nickel that is not comparable to, if you will, the ferronickel and other nickel sources that go into stainless, for instance. It's got to be high purity, and this high purity has really been dominated by the sulfide world, and the sulfide world, has been shrinking for the last 10 years as the dominance from the laterite world in Indonesia. The latest project in Indonesia are looking at trying to put in HPAL technique, so it's high pressure acid leach technology, where they can actually take a laterite nickel and make a pure form for it. And that has really been the thrust of some of the newer kind of production out of Indonesia. But it is very high carbon, very high. It's all based on coal-fired power. It's got a big impact to the planet. And when you actually align that with the EV world, it's not a good alignment. The EV world is about lowering our carbon footprint, making us cleaner and world, if you will. And that isn't the nickel that's going to do it. And that's really what we're starting to see, is that understanding of where the nickel comes from is important. An atom isn't an atom. It's what is done in order to produce that atom.
Is it a matter of then looking for newer sources of nickel, to feed this growing demand, or is it technology? Like where is that new kind of nickel or the higher grade nickel will come from?
Yeah, I think the key is the lower carbon footprint nickel, really, and that's the sulfide world. And in the reason for that is the sulfide world is the separation process utilizes a lot of the energy from the ore itself in terms of the sulfur contained adds energy to the source. If you take a look at new projects such as Nickel Creek Platinum, what we have is a situation where we actually produce, it's called through carbon sequestration, we actually produce a very, very low carbon footprint nickel because we absorb carbon dioxide as part of our tailings process. So the tailings and waste rock will actually absorb carbon dioxide. It net result is a very low carbon nickel. So when you actually ask where the nickel is going to come from, the sulfide world is looking for nickel, and the nickel is going to come from what I would say is lower grade nickel deposits, because we found almost all of the high grade nickel. That's the challenge that we have, right? The laterites are fulfilling a very important need of supplying significant nickel for the stainless. But the challenge we have is we need to bring these new sulfide projects into play that have this low carbon footprint and can feed into the EV market.
Right. That's probably this is probably a good time to talk about your project. As you mentioned, Nickel Shäw. Could you talk a bit more about this project and how you see your company and this project play in this whole, dynamic of the increased nickel demand and, increasing supply?
Yeah, no, absolutely. So projects like Nickel Creek, we're very large. So in terms of we would be a 45,000 ton per day mill type operation. So it's a very large operation, producing significant nickel for a long time. So these are, 20, 30 year plus timeframes of producing nickel, which is really important in terms of when you put in the infrastructure for a project, you want to have longevity when you spend the effort, the time putting infrastructure in for these projects. We actually, because of the low carbon footprint, the ability to go, directly into smelting technology where you produce pure nickel that is suitable for the EV market, we are really a natural for the next phase of the nickel market. And when I say the next phase, it's really, as we all know, commodity it's all price driven. So projects like ours require prices to bring us into production. Those prices are something that, we would prefer it to be, nice, even slope to getting to that price. But what typically happens with commodity markets is it doesn't, the prices don't shift enough until the market recognizes that they're going to be short. And really, that's where we're sitting right now. A lot of people's expectations are that the nickel is going to be satisfied from Indonesia, but it's actually not going to be enough nickel over the next decade. And it takes 5 years for projects to actually get into it's 5 to 10 years depending on the project. So our goal with Nickel Creek is to get ourselves ready for that, which means we've done our PFS, a pre-feasibility study, and so the next phase is to do a feasibility study and start the permitting process such that when the market starts to really kind of shift and move because of the requirement for nickel, we have a project that's ready, to be developed and to help satisfy that.
Right. And I guess another side of that is, investments in nickel. So, compared to the other more popular, more popular battery metals such as copper and lithium, are you seeing more investor interest increasing in nickel? Like, what are you seeing from the investor community out there when it comes to nickel?
Yeah, I'd say right now, in this current world that we have, the investor community and almost everything is kind of very cautious right now. I would say as a time period, there's unrest in the world, wars, there's uncertainty around, recessions and different things have been bantied around. I would say a lot of investors are hesitating right now in terms of from a overall commodity. Um, when you actually look at us about a year and a half ago, if you look at the nickel industry, there was a lot more, interest and focus on it. I'd say in the last year, things are kind of slowed down as people try to understand just how fast are the EV markets going to expand. What's the requirement going to be over the short term, if you will. And so I would say that there's generally a good interest for nickel, that people understand the requirement for nickel, but I think there's a little bit of wait and see in the short term, and you see that in the market. The prices come off. There's been some supply announcements coming out of Indonesia, and people are talking about a surplus in the market after having gone through deficits for a few years. So that I think there's a bit of a wait and see attitude when it comes to nickel from an investment point of view. Which really brings us to the challenge that I've always said is that the problem is, when you want the nickel, it's going to be a 5 to 7 year process and it's too late. So this is really it's a concern I have for overall for in general that it really shifts the price significantly, which is never in the best interest of everybody. It's better to have a nice steady price increase, but I would say that we're kind of leading ourselves up for a very hefty price swing at some point in the not too distant future.
And so if you're speaking to an investor right now, why should they specifically look at Nickel Creek when considering, getting into the nickel space?
Yeah. So for me, what you want is people that are highly leveraged to the upswing of nickel price. So that means you're large, you have a large volume, you have that capability to, when the price does swing, you represent a significant delta, if you will, because of that. So looking at something like Nickel Creek, we've got not just nickel. The benefit of a Nickel Creek is we have the copper and cobalt, which are also critical minerals, as well as platinum and palladium. And I know there's a lot of conversations about platinum and palladium in the market in terms of the EVs replacing the platinum, palladium, and auto catalysts. But the focus for me is those metals are becoming increasingly difficult to get out of South Africa and Russia. And so really from a geopolitical risk, we represent a significant opportunity on the platinum, palladium as a byproduct to the nickel. So really it means that every ton we're bringing out of the ground is worth more money because of these byproducts. So it's a good time to invest in companies like Nickel Creek Platinum, where when the market's low, you want to invest in us, right? That's the key. You want to invest in our type of projects now, not when the nickel market's gone crazy and our things are already kind of moved on, if you will. So this is the time to do it.
Great. Well, thanks again for joining me and sharing your insights today, Stuart.
Great. Well, thank you for having me, and I appreciate the opportunity to talk about it.
Great. And thanks everyone for watching. Join us again next time for another engaging conversation on CEO Insights. If you like this video, make sure you subscribe to our channel and turn on notifications so you don't miss future updates and interviews. See you next time.